So
Excellent.
yeah.
And when I first heard of you, here, we'll go ahead and get started. We'll call
Yeah.
this
All right.
the start time. All right. So first, everybody, welcome. Our group expert series continues. This is for the month of June, and Mr. Douglas Essay is joining us today. I hope I said that right.
Is it? You got it, man.
All right. We get there. Okay. Now, the first time I heard of Douglas was on Sandy Chaselle's podcast, Top of the Table. So if you haven't heard that interview, it's on Sandy's YouTube channel. It's also on SoundCloud. That's where I first heard of Douglas. And of course, when Sandy launched this his podcast. So when Douglas joined our group, I'm like, dude, he knows his stuff. We need to get something out here so that we can all benefit. So Douglas is a top of the table member, which means essentially you do about $1 million of business plus a year, roughly. How many years have you been top of the table from your own production?
When did I even do about 5 years, I think 5 years, and I was caught off the table as well.
Mhm.
You know, so
Actually,
yeah,
so as we all have our growth curve,
right.
as we're growing and maturing into what we do. So awesome. I love that when I can learn from anybody who's reached essentially the pinnacle and higher of our industry. And of course, you do have an agency. You've got a number of agents that you work with directly,
Yes.
that you mentor, and so you could definitely talk about that. But you're here. We're going to talk about leveraging life insurance. We're talking about IUL and whole life. So you're going to realize that you're not necessarily in one camp or the other. You probably have preferences, but by
Yeah,
all means, take it away and show us what you want to talk about, and then we'll have fun with that other conversation later.
all right, cool. And can you help me so that I could be able to share my screen as well?
Yes, I will do that.
So yeah, I've been in this industry now over 20 years. And when I got started, I started selling deposit term where we go out. Yeah, man, where we go. I was 24 years old. I was recruited into the industry and they just started, that's all the company did. Deposit term. For those of you that don't know what that is, that's a product where you tell people to save for retirement or college planning for their kids, but you're really selling them very, very expensive term insurance with an annuity rider attached to it, basically.
I remember hearing about that type of thing. Okay.
Yeah. So I did that for a number of years. I actually rode the metro, from one end of the metro to the other end, getting people to fill out college education survey for their kids, because I realized quickly that everyone wants their children to go to college, and they'll do anything to find the money to make sure that happens, especially when the kids are young in that age, between the baby age and when the children, turn to 18 before they start talking back to you, right? That's when you love your children, right? Because as soon as they start responding back, it's a crazy thing. So, so I tapped into that and started talking to parents about that. And we, sold a lot of insurance until I met my first mentor that said, let me see your policies that you sell. Then I showed him one of the policies and he ripped that stuff, man, showed me that, man, this is a ripoff. You know that, right? I'm like, what? And I'm like, man, I didn't know that. So I basically, then he taught me how Universal Life Option B worked. And it's so funny, this guy used to be a Primerica agent and he left Primerica when he learned about cash value life insurance. So he still understood that he was using the whole life, concept, killing the whole life. The whole life is bad, but then he would sell IUL. I mean, Universal Life, not IUL, because they didn't have IUL back then.
Right. But
option B, increase in death benefits. So I learned that. And then until he screwed me, because, in this industry, there's a lot of criminals in this business. So he screwed me real good. And I talked to the guy that does my medical exams. That guy came and I said, listen, man, can you find me someone that's halfway decent in this industry? I mean, that'll let me do what I do best. And he referred me to the agency that I've been with now for over 20 years, American Classic Agency. So I've been with them since. And then I met my second mentor that said, listen, why are you talking bad about whole life insurance? Or, IUL? He said, just sell the stuff, understand it, learn it, term insurance, whole, whatever, just learn it. That's your job, to learn how these things work. So I said, okay. So I started researching and started understanding that life insurance, at the end of the day, one of the questions he asked me, he said, okay, look at the company we sell for. Do they have whole life insurance? I said, yep. Do they have IUL? I said, yep. Do they have universal life? I said, yep. Do they have term insurance? I said, yeah. He said, so why are you talking bad about those products? I'm like, man. He said, listen, insurance companies are manufacturing company. They manufacture product. That's all they do. So, and every year they're going to come up with a new product. And you know what? Sure enough, every year they come up with new product. Every year. You learn one product, next year a new one comes up. You're like, man, we got to sell this. So what I teach, folks that are in my mentorship class is, just understand the business. Because at the end of the day, your customers, your clients, they want to trust you. They are doing business with you. They're not doing business with the insurance company. They're not doing business with this agency. They're doing business with you. If they trust you, they'll do what you tell them. Because at the end of the day, when it's all said and done, it doesn't matter, oh, they're AA rated. These clients trust you. You've come into my house and you've sold me your persona, your dress nice or whatever, your swag. That's what they come. They're like, oh, we like you. All right, who should we write the check to? See, they always ask that question. Who should we write the check to? So I teach, just do the best for your customers that you can sleep at night, they can sleep at night. So with that said, I have a number of tools I'll share with, everyone that you could start using that took me from maybe a six-figure income producer to a 7-figure producer, and I use those softwares that I use. You got to invest in your business as an agent. You cannot be cheap when it comes to your business. And find a good mentor that understands the business and tap in, so let me share my screen real quick and show some of the software that I use. I just use this one to close a sale right now for $60,000 single premium whole life and $1,500 a month IUL. So I sell 2 policies every time with a family, every time. Nice. So, so this product, this software is one that every one of you should get. It's called Circular Wealth. It's good to me. I've used it, constantly use it to explain concepts, to make it a lot simpler for people. It's cool. It's good. A picture tells 1,000 stories. There's a ton of what they call them, softwares like this out there. There's, for different conversation. I just like this particular one because I happen to also, I've spent money with Don Blanton that developed it. I've been in his mentorship class, paid, I think the first time I invested in his product was when the guy was on stage and sold $100,000 premium on stage in front of all of us using the software. I invested in his software immediately that day.
You went to Cal College.
Cal College, yes.
That's part of what Don Blanton will do. Now, I have not been to Cal College, but I know that he's molded it after the old Leaps. I call it old, but Leap System has their symposium, and they would bring somebody up. They would do their situation live right there in front of the audience. Right. Which I can't believe people would do that, but like, okay,
right.
They sold $100,000 annual premium.
Yeah, man.
Wow.
And the guy was asking, where should I dump the money? And he never mentioned life insurance one time. So that, but I go to the stuff every year. It's like my juice every morning, every first of every year, I go to Cal College. I heard of a league, but I never participated. I never knew about them, but this was the first one somebody introduced me to. So I jumped on. And then another one I use is YFB, of course, Your Family Bank, where we help families get out of debt, show them a way. Because again, one thing that I do is basically understanding how whole life insurance, again, all this software helps you sell life insurance. That's all it is, just helps you sell life insurance, makes conversation easy. Like what I just showed on here is me educating this particular client I just finished. That's the 60,000 I just put in a whole life, single premium whole life that we use. Just this is what I just did right now, close the deal in 2 sales, 60,000 single and $1,500 a month, IUL and a whole life. 60 G's. Basically just talking, having this conversation. So, so leveraging cash value life insurance, one, I always say this, you cannot sell something that you don't own. Unfortunately, there's a lot of insurance agents that do not own the product and they don't believe in it themselves, but they sell it for commission, which is, you're going to be okay for a minute, but you're never going to be successful in this business. And when you die, then all that stuff happens because your family sees you like, man, you don't even have insurance and you've been selling it. And there's a lot of agents that have died and they don't even own life insurance. And that's sad. I own about 15 life insurance policies. I have whole life and I also have IUL, and I leverage the heck out of those policies because, I use them. So for example, I come in and let me build something just because we're all insurance agents here. So, I'm going to talk to you just like I talk to my agents and how I talk with them. So basically I use this software a lot, as you can see. It's conversation, easy, makes the conversation a lot easier and to have. And basically all I'm doing is just explaining concepts to clients, how you can use cash value insurance to buy investment, to do different things that you want to buy. If you want to invest in real estate, and there's a difference between saving money and investing money. A lot of people get that confused. They don't really understand. They start, you cannot just jump. I mean, you could do it, but then you end up killing yourself because you're jumping from your income and immediately jumping into an investment product that you don't even understand. You don't know what's going on. Investment it's an opportunity. So be patient. I always say, be patient first, wait, take your time and let the stuff work first. Save up your money little by little and wait for the right investment opportunity to present itself. When it presents itself, then you say, okay, instead of keeping money in a savings account at your local bank, this is what I do. Again, I'm gonna give you everything I use so you get it, so you can use it if you can, make sense. So for example, this particular customers I just talked to now, this is what I did. They told me, I asked them, where's your money sitting? And they said, well, they have 60,000 sitting in a bank. I said, which bank? And they said, Truist. So this is Truist. This is Truist Bank. I said, okay. I said, Truist. I said, so what is the purpose of the money? Why is it sitting at Truist? They said, well, if we have emergency, we need to take care of our family. So there's something happens. I said, that's a great idea. That's great. Let's look at Truist. Do you know what kind of bank account, what savings account you have with them? They're like, well, we just have the basic account. So I go to Truist and I pull up savings. I pull up the savings and I say, okay, let's look at just different ones, and they're right here and they give it to you. I click that. I said, do you know how much interest rate they're paying you? And I pull it up and I show them right there. Boom. Look at that, 0.01%. Because one thing I realized, people don't really look at those things. They never pay attention. They don't know. They just know, oh, I got $4. I got $6. But I need to show it to you in black and white. I need you to see it so that when I'm telling you about the benefit of life insurance, you're not going to argue with me about it. Because again, one thing I teach is this: life insurance is a parking garage to park money. It's not an investment. I'm not here to compete with mutual funds, stocks, any of that stuff. That's not I could be with them when I get to that conversation. When it's the conversation to have about investments, then, I'll show you some things that will kill out the mutual fund stocks all day. But right now, let's talk about parking your money. And I use an example. I say, listen, at the end of the day, think about your money like a job. All right. You go to work. That means basically you go to work, you make money, you come home. Okay. Think about your money like a car. You go to the dealership, you buy a car, you bring it home. There's only two places you're going to park your car. The first is the garage or on the street, right? They say, yeah, is there anything else, anywhere else you're going to park the car? No, the garage or on the street. Okay, cool. If you park your car on the street and you go to sleep, your brand new, Lexus or Mercedes-Benz or a Porsche Taycan like I drive, which is an electric car, if you park it on the street and you go to sleep at night, and there's a noise that happens, and all of a sudden there's a commotion going out on the street, some people running. You jump out of bed and look and like, man, I hope nobody's messing up with my car. Say, but if it's in your garage, you sleep like a baby. They could make all the noise all day long. You don't even think about it. It doesn't bother you. You're like, man, the client's like, okay, yeah, you're right. I said, same thing with your money. Your money needs to sit in a place where it's safe and secure, where you should never have to worry about tax liens, inflation, divorce court, 50-50. You know, all the things that eat up your money, you need to think about. They're like, wow, you know, I never thought about it that way. I said, so, but, and look at this, they're paying you 0.01%. So you took your hard-earned $60,000 and you gave it to the bank. I said, let me bring this money to life for you. Then I go back to my account and I say, okay, so the bank, you're giving them zero. This is the interest rate you're earning. So it's going to take you 5 years to make $30. And then I keep quiet. And then I let this simmer in their mind for a little bit. And they look at that money. They're like, man, I didn't know that. I said, but let's even go 1 year. Look at how much they gave you in 1 year. $6. This is your bank truest. How does this make you feel? You went to your bank and you loaned them money. I said, but let's go back to Truist. Let's go. And I say, I said, Truist is is one, but all of them work the same way. Let's look at loans. What if you want to borrow money? Let's say, you want to take a loan from them for an emergency or something, a personal loan.
By the way, I got to say, for Truist benefit, that limit for the rate, say it goes up to $99 billion. I think that there's a lot of gumption with that kind of marketing.
I told them, I said, listen, this bank is saying, we don't care how much you're giving us. We're gonna pay you the same interest rate, zero. I'm like, man, imagine me telling this to a business owner. See, folks, see how you get those big high net worth people? Because they have money in the bank. Because they don't know about life insurance. They've been listening to, Dave Ramsey, Susie Orman, and all these other people. So that's okay, but that's fine. You don't even have to talk too much. Just show them. So I go to loans and I say, loans, let's look at personal loans. I said, let's see what they're saying. Personal loan, look at that, 4.9%. I said, so Truist is saying to you, Mr. Klein, first you give me your money, I'll give you 0.01%. So you loan Truist money and they turn around, give you 0.01%. And then you go back the next day to borrow money from the same bank. And they say, hey, 4.9%. Let's look at what that looks like. And I bring up my, I say, okay, let's say you took out $20,000. I see right there. See the same, I just did this. This is what I just did and closed. I didn't have to sugarcoat nothing. I didn't have to show them the real life because they're consumer just like me. My clients are like me, and I let them know, listen, I don't have any money in a savings account with any bank. I don't. I just have a checking account to pay my bills. And if I do have money in a savings account at a bank, it's probably like $5 that I used to open up the account so I could buy a car. And it's probably at a credit union because they wanted me to. That's
the membership savings. Yeah, I was at a credit union for 3 years, so I get that.
Exactly. Yeah. That's the only reason I have a credit union account, because I normally shop around what interest rate, who has a better deal. I don't use my insurance money to buy cars because I use my insurance money to invest in things that's going to make me money, not for liability, But that's another conversation for another day.
But it's an important conversation. It's a good one. Glad you made that differentiation there.
You got to. So I showed them this and I said, listen, so in the same breath here, let's look at 5 years. So 5 years, this bank is saying, we're gonna give you money in 5 years and you're gonna pay us back interest. So $377 a month is what you're gonna pay us over 5 years. 377, 4.9%, they'll make $2,640 off of you. And guess what they did? All they did was take 20,000 out of your 60 and give it back to you and charge you that interest. And they make 2,640 off of your money. And they look at me like, I said, how does that make you feel about that? You know, they're like, man, that's crazy. I say, listen, don't be upset with the bank because people use OPM, other people's money. Banks don't print money. Banks make money based on charging interest rate. That's how they make their money. They charge different people different interest rate. That's why you have to have credit. That's why I call myself the cash value king. And I say, you know what? Cash is king, credit is queen, but they cannot be different. They cannot be separate. They have to be married. Cash has to get married to credit. They got to come together as one. Take them to church and they get married. And then they make you babies, money babies.
I love that. That's great.
Right? So they make you money babies. That's what you want. So that you can
Now, do you add in the mistress in there or any? Sorry.
You know, hey, I have a fiance now, so I would, if I was single, man, I would have added that. But that's good. That's a good one. I like that. But so I showed this, and you know, and at the end of the day, it's all about showing the customers how to really take their money to the next level. And I say, listen, again, what we're gonna do is, what if we could put this in an insurance policy that's gonna pay you a 4% return, guaranteed, but at the same time, it gives you a death benefit. It says, in case you die, you know, we won't move this money over to a death benefit, life insurance, cash value insurance. So not only do you have cash, just like you have with your bank, now it's safe. And you also, just if you mess around and die, your family still gets a death benefit. So in this case, the particular plan I used gave them $160,000 death benefit based on the person's age, you know, because they're older, and they put in the 60K, and the death benefit is 160. I said, so we have your cash in the plan. Now we could borrow against this policy, and I have a program that I normally use for different opportunities for my clients to invest if they want to. We show them somewhere they could do inside of a real estate deal, or even another investment that's called, most people are not familiar with, you know, but you know, that's on a different class. We're going to talk about that in a different class. I can't tell you to, you know, give you all that information, but if you want to tap in, we got you. You know, you could tap into that class. But check this out. So we say, you know what, save tank. That's the key. So now when you want to buy this house, this property, guess what happens? You know, you could go into your insurance policy, take a loan against the policy to buy the house. But let me explain this real good, because a lot of times, you know, a lot of people don't even understand this whole concept. So let's start from the beginning. So let's say I want to borrow money from a traditional bank to buy my dream home, my house, right? So what the banks do, they say, okay, hey, how much do you make a year? I make 100K. Okay, good, $100,000. That's how much I make a year. All right, good stuff. All right, you know, then the next question, they say, how is your credit, sir? You know, now if you're not married to credit because your credit is jacked up, then they might decline you. They don't care how much money you make. If your credit is bad, debt to income ratio, you know, which is what happens to so many people, right? They look at debt to income. You know, in this case, this person's debt to income, let's say it's like this. You definitely ain't buying that house. You got to stay in your apartment on your sleep. You know, they don't care. The banks don't care. They're like, no, we're not giving you no money. We don't care how much you have in your savings. Your debt to income ratio is too high. So what if we do the same? So that's the first way banks do it, right? And they use your income as collateral first. And then once you close on the deal, they switch it to the house. The house becomes collateral. So you got to explain stuff to your customers so they understand. Because if they don't understand, they're not going to move. They're not going to make any decision. So that's the next thing. So I show them that. And I say, but you know what we're going to do? What if I switch this situation and bring a life insurance company into the mix? And the life insurance say, listen, you could buy that property that you want to flip and boom. And we use your life insurance as collateral instead of your house. Now it's like your house is actually free and clear. This property you just bought, it's like you pay cash. And then I give examples of how I've used my life insurance to buy investment properties. I say, let me give you an example. I had a situation where somebody contacted me because, again, I get a lot of leads for different things because people, you know, they find me. And the lady said, listen, Douglas, I bought a property for $25,000. She bought it for $25,000 in Philly. She fixed it up. She got a hard money lender who loaned her money, and she owed $75,000. I mean, 100 grand, basically 100,000. So she owed $100,000 on the property. Now, this property is worth 190K. She owes $100,000 to a hard money lender, paying 12% interest because she's an investor. She was fixing it up, made it look all pretty and nice and all that stuff. But guess what? The contractors ran away. They disappeared during COVID. So now she don't have the money, and she didn't want to mess up her credit with the hard money lender because she wants to keep her credit good. So she reached out to a person like me that have a lot of cash sitting in my policy, waiting for the right opportunity. I just sit there, wait. When is the money coming? Who's coming? Who's coming? She came to me. She said, I need 100,000. Can you help me, you know, get rid of this and you could have the property? I said, sure, all day, every day. I sent my guys over. They looked at it. They said, Douglas, we just need $7,000 to fix it up and make it look good. And we could either put it in the market and sell it or rent it out. I said, all right, I'll clean up your name from the hard money lender. I'll pay them off and we own the property. She said, all right, cool. Thank you. I appreciate you for doing it. I thank, very happy, because guess what? She got to save her credit. So I went to my insurance company. Hey, I didn't even tell them what I need the money for. I just said, give me my money, man. Give me my money, which is their money. But in the eyes of the hard money lender, is my money. So the hard money, see what I'm saying? The hard money lender gave me, got the $100,000. I paid off the hard money lender cash. But now I owe the insurance company 100 G's. But they put a lien of 100,000 and charge me simple interest. See, one thing I always teach my customers, again, not insurance company charge interest only, unlike a bank that charge principal and interest, because bank make money up front. Insurance companies say, listen, at the end of the day, we know one day you're gonna die. Your ass is gonna die. When you die, we'll get our money. But you know what? We're not going to report you to the credit bureau. We're not going to report you to the, we're not going to tell the world that you're a bad person. Take your time and pay us back. But if you are a smart individual, what do? Start paying them back. That's the mistake so many people make. They don't pay back their loan. And I hear a lot of insurance agents telling people, oh, you don't have to pay back. No, teach your customers to be disciplined. Because if they don't pay back, then they lose all the time. So I teach them, pay the loan back. Treat it as if you borrowed money from a bank. If you went to Bank of America to borrow money today, you will start paying them back immediately. So why don't you pay the insurance company back? Insurance company, what did they do to you? They loaned you money that you wanted at the time you wanted it. They say, listen, you control the loan, you control the payout. You decide if you want to take 50 years to pay them back, take 50 years and pay them back. There's no long term, there's no term. So in my example, I bought the house, it's free and clear. There's no loan, there's no mortgage, there's no lien. It's free and clear. The only person I owe is the insurance company. And then we rented it out and started getting rental income of $1,500 a month. That's what I'm getting from that property. Then I used that money to start paying back the insurance company. And guess what I do? I start paying them back, and I'm paying them back. Boom, boom, boom. And I do a math with this. I say, okay, if I went to the bank and I borrowed $100,000, 30-year loan, how much would the monthly payment be? Monthly payment would have been, let me say, on this 4.9, let's use that. So the monthly payment will be $477 a month. Take you 30 years to pay it. But guess what I'm doing? I don't need the $1,500 rental income. I put that back in my insurance company. Look at that. I pay off my insurance. Is the only time I say make extra payment. The only time I tell my clients to make extra payment when they borrow money from insurance. Why is that? Well, because the faster I pay off the loan, the more opportunities I could use more money and do more deals. I pay it off quickly, I could jump on and gain another deal. Opportunities will always come and present itself. The question is, will you be ready to take advantage of that opportunity when it presents itself? Unfortunately, for so many people, they're like, man, I could buy this house right now. Well, they ain't got no money because they put all their money in the savings. They put in a put and take savings account. They put it in, they take it out. Then the opportunity presents itself. Oh, well, I don't have the money, girl. Oh, guy, man, you know, last year, man, I had $50,000. Man, I shouldn't have bought that car with that, paid cash in that. No. So I always use my insurance and I dump money in my insurance. And then I sit and wait. Now, right now, I have what I'm about to do because my renter just moved out. She moved out. She was good. She was a student. She was done. She moved out. And I hate renting. I hate being a landlord. But, you know, I hired a management company to manage it. But so what I'm about to do is do another play with that property. See, you got to be getting my well class, but I'll give you all the play real quick. Housing the homeless. This is a 3-bedroom house with 3.5 baths. Housing the homeless, doing good in the community, taking care of homeless folks. The government pays, but I'm selling the bed. They're paying $500 to $700 a bed. I put 6 beds in there. Do the math on that, baby. See, I have a wealth class I teach, but you know, so those are the things. There's so much opportunity. So many people focus on the stock market. I love putting money in places that wealthy people put money. That's why I wrote the book, Creating Generational Wealth. Because wealthy folks don't do what everybody's doing. They follow a different path. They don't like losing money and they like using other people's money. So I don't know, man, you know, people have questions for me. Just, you know, we could talk. I'm going to tap in, put a link on here for, you know, for some of my mentorship class, for those people that want to tap in and get into my mentorship class if they're interested, you know, and we could help them. But go ahead, Dave, any questions for myself or comment or anything?
Well, first, before I get into the comment or the question I've got here is, of course, when you're borrowing against your policy to invest, you still get to write off the interest.
So it depends on how you do it, right? All depends on how you do it. Because again, you know, once you borrow from your policy, yes, and can you write off the interest? I mean, yeah, if you loan it to your business, you know, I mean, you as an individual, you know, so someone depend. Now, most of my properties are owned by trust, and you know, that's another. You know, yeah. I have a wealth class I teach called havemoneyforever.com. That's on that website, havemoneyforever.com. You know, if you want to have money forever, tap into my wealth class. Let me put that link on here for those of you that might be interested in having money forever, you know, and getting that class. And I'll teach you all the secrets that I've learned in my 20-something years. I'm from West Africa, Nigeria. I didn't come here to look at trees and buildings and bridges and stuff. I came to study wealthy people in America, how they make their money, how they make their moves. And I've been blessed to be, you know, one thing with this industry, right? It puts you in front of the right people, especially if you, one, have an open mind to listen and learn. Two, if you're not willing, if you're not you don't have stingy energy, and you're not what I call a scarcity mindset agent. I'm an abundance mindset agent, and I tap into people that make more money than me in the industry and split commission. My biggest sale that I've ever done was when we insured a guy that made over $200 million. And I didn't know what to do with that guy. See, there's another client just calling me right now. I didn't know what to do with him, but I tapped into one of my mentor, retired guy. He's passed away, God rest his soul, but he was an attorney. I found this guy's website when I was doing my research for my book about wealthy families. And I found his website and I paid $4,000 for his book. The dude called me at 11 o'clock at night. He lives in Boca Raton, Florida. And he spoke to me for a good hour. I said, why did you purchase this book and pay $4,000? I've been on your website. I've looked at everything you got going. Why did you buy my book? I said, man, you said tax secrets of the wealthy. He said, oh yeah? I said, man, I want to know what they're doing. He said, okay. He said, all right, talk to me about, see, this dude was an attorney, a real estate agent, life insurance agent. He was the first person that said to me, Douglas, don't put money in the stock market. It's a gamble. He's 76. After the call, he asked me, how old do you think I am? I said, you sound like you're in your 60s. He said, no, I'm 76 years old. I only consult with wealthy people. They consult with me, and I sit down and talk to them and help them structure their families and show them how to build wealth forever. And he said, I see, you sell a lot of life insurance. You like it? I said, yeah, I sell life insurance. He said, but do you understand it? He said, do you have any wealthy clients? I said, nope. Do you have any athletes? I said, nope. He said, okay, well, that book that you just bought, they'll come to you after you finish. You don't even have to make too much noise. And when I got a big client, I called him. I said, listen, I got this client. He makes over 200 million. He said, okay, let's work with him. He said, get me this information. I got all the information he needed. I sent them. They got on the phone. Boom, boom, boom. The client flew in with his private plane. Happens to be a good friend of mine, but he's from Africa, but he travels. Big guy, owns tons of hotels. Flew in his private plane because I said to him, I said, listen, I met a very, very successful guy in this industry. I sent him the profile. I said, you're my good friend. I want you, you're making a lot of money. I need you to talk to this person so they could help you. Because the last thing I want is you die and your wealth dies. And you know what happens. And he's like, man, thank you. And boom, I got to learn every step of the way, everything they were doing, the way they structured my friend, because I was a part of the deal. And then they closed the sale. I got contracted. Boom, got a nice check. That changed my life, and that was it. And that's when I learned about premium finance, because wealthy people don't like using their money. They use bank money. My mentor, he's a Jewish guy. That was my mentor, was a Jewish guy that told me that stuff, that taught me. I'm like, okay. So that's how my business has grown. And I started doing stuff like this. And, so again, remember, brand new agents, collaborate. Don't be, and then, don't be, most times agents focus on, oh, I got to make the money myself. No, you're in college. Now you're in school. You're in a school that's going to teach you knowledge that you will get forever. So don't be scared to collaborate with people and win. And so the website, don't havemoneyforever.com. Let me put it up here. If you're interested in grabbing that, take advantage of that. All right, sorry.
No, that was great. And I'm throwing that link also into the Facebook group under the video here. And so let me get to Terrence. Terrence is a friend of mine. He works in a bank. But he says, what do you say on the first contact? Assuming you know the balance and the rate, how do you go about setting the appointment?
Okay, so I prospect different ways, right? because of experience in this industry. But one that I use now is just one simple thing with my friend Larry. Larry McLean developed a product called Your Family Bank. So the first time I saw it, I was like, man, this makes sense. And he's a big producer. So I just follow people that make money. I don't have time to deal with broke people. If you're broke, I ain't talking to you. Especially in this industry. So I went to his stuff. He said, listen, if I could show you how to get out of debt in less than 9 years, without you spending any additional money, including paying off your mortgage, credit card, student loans, would that be a conversation you want to have? I'm like, hell yeah. Everybody want to have that conversation. Don't matter who it is. Wealthy people want to get out of debt. They want to be debt free, right? They want to protect their asset. That's another thing wealthy people are looking. They want to protect their asset and they want to pay less taxes. Why do you think wealthy families spend millions of dollars to find ways to minimize tax? Remember, Trump said it, and he ain't the only one. Trump said it. I pay less taxes. I mean, I just follow tax laws. Mitt Romney said it. I mean, all of them. Warren Buffett, all of them. They pay less taxes. So if they're doing that, so I use those things to have conversations. Then when they give me the opportunity to sit down with them, then I bring up the software and we have there's a whole class, there's a whole process. It's not just boom. I don't talk about life insurance right away. I go through the process, educate them first. Once I educate them first, they understand, I have to teach them things that, I guess calling it unlearning their old principles, things that they've learned all these years. I mean, they've been doing the same thing for the last 25 years. All of a sudden you want to come tell them life insurance, especially if they're Dave Ramsey disciple, or Susie Orman, I remember I was doing a conference at a church, man. And I went to, I was doing a conference, and then at the conference, the pastor invited me to do a conference, and I'm like, okay. But I said, let me listen to the way the pastor preaches to these people. So I went through every service that he was doing before the day I had to speak. And I realized he teaches them how, all the church members, I mean, it's a mega church pastor. And he teaches them how to buy land, invest in a Rotary. I mean, a lot of his folks are ready. So the day I was speaking, they also had a guy from Raymond James. The room was packed. He was talking about mutual fund, making all sex, talking all crazy. They make it sound, oh, you diversify your portfolio, blah, blah, blah. Now, I'm securities licensed too, but I wasn't at that time. I was. And he was talking all this. Some people left the room, walked away. I'm like, good God Almighty, this guy's, I mean, the room is getting empty. And the pastor's wife was right there because I wanted to close the pastor. And she was in the room, and then all of a sudden she left. I'm like, this idiot, man, he's killing the audience, everybody here. So that's okay. So as soon as my turn came, I started with the music because the pastor was building a huge church, and there was a music he normally played. See, I went to his service, so I got to hear the message he was telling them. So there was a music he plays, and I took the music, the recording, and I started playing it. And then people started, they're like, okay. And then I got on stage and started talking about the power of life insurance, what you could do with it. And then guess what I did? I made a phone call to the insurance company that I had policies with. I said, let me show you how easy it is to take a loan from life insurance. And I called up the company and I said, hey, I need to take a loan for $25,000 on my policy. She said, oh, okay, what's your policy number? I gave it to her. She said, oh, okay. All right, you do have which account should we send the money to? Man, I wrote $75,000 in premium that week.
Nice.
Awesome.
So yeah, man. Yes.
Awesome.
Garcia, you have a question?
Oh, me?
Yeah,
hold on.
You're flying.
We got you, my friend. He's my friend here in Marietta.
Okay.
Yeah. Oh, yeah, I'm sorry. Yeah, no, I just said I enjoyed it. I love it. Thank you, man, because people don't know. I brainstorm with David all the time.
Yes, People don't
Yeah.
understand, man. But
Yeah.
you know, this business is so fun if you make it fun and you take your time to learn. It's not just, you know, sometimes we get into the wrong classes and people tell us, oh, don't do this, don't sell this. No, just take your time. When you study for your license, you did it, it was just you at that table and you passed the test. So all you got to do now is take your
I
time
agree.
and learn the business. And
Yep.
if your upline or whoever you're dealing with doesn't know, find somebody that knows. You're independent for a reason.
Preach
Yeah.
it, brother. But
Yeah.
going to church and
Yeah.
back on this one. No, completely agree with you. And that's one reason why, I mean, you use both IUL and whole life, depending on whatever
Yes.
the situation is. I could do the same thing. Of course, I have a preference to participating whole life, but that doesn't
Yes.
mean that I'm completely closed-minded. And I mean, because I have this philosophy that every legitimate product has a fit. And
Yes.
like, was it like 10 years ago or so, reverse mortgages were the worst thing out there ever, but they're a legitimate product. The question is, how do we make it fit? What is the best way to utilize these things? So, having unfounded prejudices on legitimate products does not serve us. Now, that doesn't mean
Mhm.
we have to sell everything, but I like knowing, how can these things work? How can it make it fit? How can it make it a benefit to the client? And of course,
Yes.
there's certain times where certain products are not a good fit.
Right.
Um, Someone just getting out of college, maybe a large whole life insurance policy is not the best thing right out of the gate.
Mm.
Get them that term,
No.
we can convert it over time. Let me show you what's in the future for you. But right now, that's probably not the best thing. But I'll make you a client. Let's get you this term policy. We'll get you set up for later. There's different timings for different things. So keeping our minds open. I mean, for my career, I spent 3 years at a credit union as a investment advisor, and I was doing my pitch was mutual funds, mutual funds, mutual funds. Uh, you either have naked mutual funds for the mutual fund company, or you have protected mutual funds in a variable annuity, or we have asset management through, but it's all mutual funds. Which way do you want it?
Right.
But I didn't know anything about life insurance. And I'm like, people are buying this stuff. I don't understand why. Yes, there's less money, it seems, but over time, I've learned that less money in the right place is far more empowering than too much money in the wrong place. So,
Yep.
like your example with the real estate, someone didn't have the money to be able to buy it. Well, even if you had, let's say you had $500,000 in your 401k, you still wouldn't have enough money because the 401k would limit you to 50% of the balance or 50,000, whichever's lower. So even
Yep.
if you could get a loan against your 401k, you still couldn't do it. The only way you could get it, you have to quit your job.
That's right.
It's the only way.
And and for business, so I'll give another story about because my stuff that I do is just based on me, man. So I had all my securities license. I let it go because I got sick and tired of just, I can't talk on the radio. I can't do something. I'm like, nah, hell no. I need to be free,
Yeah.
So I bought a SEP IRA.
Mhm.
When I was, business, I'm a securities guy. So I'm going to invest in SEP. I'm self-employed. So I do SEP IRA. I was dumping money in my SEP until my dad got sick and I needed to send him to India for treatment because he's in Africa. So I said, I'm going to send you to India to get food treatment and all that stuff. So I worked it out, got the hospital and sent him to India. So I took a loan out of my SEP IRA for $30,000. And so, okay, you got 60 days because it's an IRA. So 60 days to put the money back. Okay.
Mhm.
In my mind, I'm thinking 60 calendar days, but it's 60 business days. Big difference.
Yeah.
That means Saturday, Sunday don't count. Now, I said, okay, when I took it out, of course, buy low, sell high. So I sold it, right? That's what it is when you borrow money and all that stuff, put it back in. So I took the money, I think it was withdrawal, basically, but I'm going to put it back. Buy low, sell high. All right. So when it's time for me to put it back, I needed to put it back at the right time. So I was watching the market. The market wasn't doing what I wanted. So when I put it back in, I lost value. I put back 30 grand, but my value was 20 G's. So I lost $10,000. That was the day I said, man, I need to take a closer look at life insurance. Because when you borrow money from life insurance, you don't have to worry about buy low, sell high. Because life insurance is not an investment, it's a parking garage to park money. And then I can invest in things that I'm familiar with, which I do invest in: real estate, life settlement, which a lot of people don't even have a clue about. Invest heavily in that, because Warren Buffett, I follow what the wealthy families do. Warren Buffett puts about 600 million in life settlements every year. Most people think, there's different levels of life settlements. Not the, I don't chase old people to find. I don't do that. I don't have time for that crap, but it's an asset class, just like real estate, and I deal with a very, very strong company that offer it. So, but yeah. Somebody's asking, if you didn't have access to IUL, would you typically recommend whole life? What are your thoughts on variable universal life? Man, when I used to have my security license, I sold a lot of variable UL because when the company that I was dealing with had it, until I started understanding, then IULs came out and I moved to IUL. I stopped selling variable universal life because I like guarantees. I like my clients not losing money in anything. I don't want to get a phone call about, man, I lost money. I don't want that. I don't want that call. So index universal life is what I do. Whole life, I do a lot of it as well. So I do both. IUL, participating whole life, of course, dividend paying whole life, and I love it. Those are the two things. IUL, whole life. That's it. And term insurance. I sell term. I have term insurance. I use term insurance as a conversion. So like right now I have on myself, I have about $5 million in term policy, and I convert it every year because every year, that's why I have so many policies. So by the time I hit 70 years old, I should have about 50 policies.
Nice. All max funded, ready to distribute tax exempt cash flow. You don't even have a tax return for.
Creating, yes, Dan Saltzman.
How you doing?
Yeah, I'm good, bro.
So what do you say? What's your language when you get into security? Since you're not security licensed, if they have a 401k IRA, different brokerage accounts, and they have to transfer money, how do you handle that? Since you're not security licensed anymore. So let's say they're going to transfer it into a whole life policy or an annuity.
I never tell them to do that.
If they want to.
Yeah, if they want to, that's fine. But I never tell a client to take money from 401k to put into a whole life or IUL. But what I will say is this: they could roll it into a self-directed IRA, and that way we could control the investments that they could put the money in the sense that they could not invest in certain funds that I have, some of the funds that I do, they could put money in that. But,
so are you positioning the conversation to new money, new contributions, setting up a new account? So
yeah,
let's say someone's doing a 401k, they're putting 5% in, their company's matching them 5%, and then they're doing the rest up until the maximum. Then they realize, obviously through a conversation, that's not a good deal. And so instead of that, they're still going to do their 401k for the free match. Then this other money, they would set up a new account. So there's really no transfers.
Right. So yes. So I let them know. I do say that, where I show them that they need to now start using the same money that they were putting. Because first of all, I have to explain what a 401k is. Just because you explain what a 401k don't mean you're talking about the securities part of it, right? You got to educate. People don't know. They just did a 401k because their job said this is what we have. So I need to educate them on how a 401k works, how an IRA works, so they know, and my conversation with them is, listen, why are you putting your money in prison? Why are you locking up your money? You know, if you need money right now, you're gonna get hit with a 10% penalty, you gotta pay taxes. And at the same time, then here's a good one that I do. So let's say I'm talking to a person that's making $300,000 a year, right? I said, let me ask you a question. I said, what's the maximum you could put in your 401k? They're like 19,500, whatever the number is. I said, okay. I said, your receptionist at the office that makes $50,000 a year, what's the maximum she could put in her 401k? 19,500. I said, okay, cool. I said, do you see how the government is about to set you up? So right now you're making 300 G's, and now let's say you and your assistant have this at the same age, right? You're both 40 years old. 25 years, fast forward to 25 years today, you've both been putting $19,500 every year. That means when you turn 65, you and her will be on the same street. You'll be in the same neighborhood. She becomes your neighbor. Now you're living over here. You can't survive because you're living in the same neighborhood with your receptionist. Is that what you want? And you think taxes is going to be lower or higher in the future? It's going to be higher. Okay. So why you keep putting money in an account that later down the line, you got to pay taxes on all that money, and you and your receptionist will be living in the same neighborhood? They're like, man, I never looked at it that way. I know most people don't. They don't look at it that way. So let me put you in a plan where, one, you could have the highest amount of money. And then I asked him the second question. Your financial advisor, what is the percentage that they told you that you're going to retire with? 80% of your income, right? So yeah, 80%. So what they're saying to you is when you retire 30 years from now, you got to live off of 80%. Can you live off of 80% of your income right now? No. So how are you going to do that 30 years from today? With inflation and everything else that comes after your money.
Yeah, that's so funny.
I said, I want you to
love
have
that.
the maximum. I want you to have double the amount of money that you're making. But I want you to be able to retire and don't pay a single dollar in taxes and receive lifetime pension and let the insurance company fund it for you.
So you're telling me your advisor is telling you to reduce your lifestyle today, then they're going to tell you to reduce your lifestyle in the future. How does that sound?
Exactly.
I'd like for you to increase your lifestyle. When you retire,
Yeah,
you want to play more
exactly.
golf,
Yeah,
boat,
you
travel, visit the
Yeah.
kids, the grandkids.
And business owners don't retire. We enjoy our lifestyle.
That's why we're in this
Retire.
business.
Retirement is for people that work a job, J-O-B. They're the ones that want
Cubicle
to
managers.
travel. They're the ones that want to travel when they retire. I'm going to travel the world. Well, I'm already traveling the world right now as a business owner. I wake up whenever I want. I travel wherever I want to go. So I don't want to wait till 65 to start traveling and enjoying the world. So why am I putting money in a 401k plan or a solo 401k and all that stuff? Why? When I could do other things.
Well, the other thing too is when they start a guaranteed account above their match, if they're taking the match for the free money, they can take higher risk and go all equities for a higher return because this is a guaranteed winner. So, and they don't have to touch that for a long time and touch only the minimum. And perhaps sometimes even a downturn, it could just, their RMD could be just dividends. So they're really not losing. They're not selling shares.
Right. Yeah. I mean, I try to just keep it very simple for them so they can understand. And I go after the government program for them. Where you parking your money? Because a 401k is a parking garage. It's empty. Doesn't have anything in there until you park mutual funds in there or stocks in there or savings account or whatever, CDs. Because you could put a CD, IRA, CD, savings account. You could do all that.
Right.
So it's a
annuity. You could put an
annuity in an IRA.
Quite a few clients with fixed annuities.
401k.
Right.
Yes. Yep.
Fixed annuity IRA. Yeah, absolutely.
Yeah. So you could do, those are all parking garage. So I always ask the client, if you're going to park money in a garage, what type of garage do you want? Do you want a garage that is safe and secure? And whenever you want, you go pull your car out. You don't have to deal with anybody. You just go. Like me, I have a Taycan, I have a Porsche, and I have a Tesla. Whenever I want to go, I don't have to buy gas. I just unplug it and go. And I come back and I put it right back in the garage.
You gotta
have
put,
cheap,
you gotta put gas in your Ferrari though, right?
I don't have a Ferrari. I don't do gas cars.
Okay. All right, let's have the compliance moment real quick because I want to get because you mentioned a couple of things here, which is that there's a difference between financial advice and securities advice.
Yes.
Everything that you're talking about, I want to make sure we get this very clear. We're not giving securities advice. We're not saying, I recommend you sell this
No.
based on the merits of the securities. We're not doing any analysis. We're not saying buy, hold, sell, or anything on the securities. It's not without proper licensing. What we're saying is that where your money is, not just what it's buying, but where it is. What's your overall strategy? And then we're not saying, I recommend you sell your securities to buy this. That's a bad thing. But you can say, we have an alternative that you can consider and you can reallocate from there if you choose. So we're not making a recommendation. We're not saying based on the securities, you should do this. We're saying there's alternatives to your capital. What would you like to do? And that's the proper way for an insurance only licensed person to do it, because we're not talking about the merits of the securities. We're talking about you have alternatives. This is your money. What do you want to do? And do we know the consequences of the decisions that we're looking at? And then in the same vein, let's talk about that really big post that you did, I don't know, about a month or so ago.
Right.
Is life insurance an investment? Let's get this out.
Basically, what I was saying was this, very simple. I said life insurance is the only investment vehicle that will accomplish what it is that you want done. People took it for whatever they took it for, thinking I was talking about, oh, it's an investment in like they're thinking about mutual fund stocks. No, life insurance, one is this. I'm using a penny to buy $1. Where else in the world am I going to go spend a penny and buy $1 and have tons of money? When I pass away, my family gets all this money. So that's one. Second, it's the only vehicle that'll make sure that there's no taxes, there's none of that, and my children will be able to get what it is that I want them to continue living the lifestyle that I've created for them. It does that. Do I have investments in the market? Yeah, I do. I have Bitcoin, I have mutual funds, I have those things. But I'm not waiting for those things to do anything for my kids ever, because the market could crash. There's war in Ukraine right now. Look at what's happening to the market. It's so funny because I got engaged, right? So went to, thank you, man. I took her to Maldives, proposed. Her ring is a 6-figure income ring. Some people make that a year. That's what I put in her finger. It's like close to almost 200,000. Big, big ring. Very, very nice ring. Went to Maldives, and again, she had her own investment with her Edward Jones guy, all this stuff, and some. And all right, baby, we gotta talk about these things, because listen, I'm like the casualty king here. I got my own thing. I'm good. All right. And then the market started tanking. So we're driving one day. She said, baby, I just didn't want to tell you. I said, what is that? Because I always bring it up, because, she got a lot of money sitting. I'm trying to tap into that. Let's invest this thing, I mean, listen, I'm a salesman, she already bought life insurance, but we need to move this money. She said, yeah, I lost some money. I said, how much exactly did you lose? She said, I really didn't want to tell you. I said, yeah, just tell me. It's happened. I'm not going to beat you up on it. I lost $190,000. I said, I said, well, what did your advisor say? It's paper loss, right? Paper loss. It's going to bounce back. I said, listen, at the end of the day, there's 2 ways we learn in life: personal experience and other people's experience. Other people's experience is the best way to learn. Personal experience is the hardest way, and it's painful. I said, so you got your learning curve. So, what do you want to do? All right. And then, we did the thing we're supposed to do. But it's all this.
If you couldn't seal that deal, that's something. But anyway, yeah.
I know, right? I mean, but sometimes you gotta, because sometimes, like everything else, they already bought. I mean, she got insurance with me, which is cool. She's funded it, but I still needed that other money. We still have that in our radar. Like, okay, we're gonna get that, but let's wait. Slow walk.
Well, and that's one of the false promises of the market, is that the market can make everybody right until they're wrong.
Exactly.
That's the only thing.
Because she's like, I'm making money. I mean, I'm getting, I'm okay. But the guy was very nervous though, because he went on Google me, especially when he saw our proposal on Instagram and all this stuff and and then he went and he's like, oh yeah, I need to meet your man, I'm like, I tell your man, is your boy, he's looked at me, he's watched my YouTube videos, so maybe he knows it's coming. That rollover transfer check, that transfer paperwork is coming anytime soon. So let him sit down, I'll wait to the right time and we'll roll all that. So, it's happened, it's gone now. We've rolled over that money. So it's in a safe fund now.
There we go. Excellent. All right. Do we have any other questions? Nothing new has come in here. Of course, Mr. Garcia, before he left, it said Warren Buffett's rule of investing. Rule number 1, don't lose money. Rule number 2, see rule number 1. So gotta love that. I'm going to check here on Facebook. Nothing new here. No.
What companies do you write for?
Let's have that conversation privately. Just hit me up privately. We'll talk about it. But companies that sell life insurance.
Yes.
That's where I write from. But good companies. I don't write for a lot of companies. I'm not contracted with 20,000 companies. Our agency don't do that. We only write for 4 companies and that's it. We're not interested in having like 2,000 companies. Boo, that's nonsense. Just find 4, you're good. They all sell the same policies anyway. But you just got to make sure they can do exactly what you're telling your clients to do. And when you look for a company that understands casualty insurance, that when the clients call the customer service people, they can say the same thing you said. Make sense?
Yes,
So
that's huge.
That's a big deal, man. Because you could lose a lot of money talking to the wrong, and you tell a client, oh yeah, you could borrow money from your policy. And they call the insurance company and they said, hell no, who told you that? What he say?
So, and I'm going to go back about 20 years or so. My dad had a number of cash value policies and he's never been in the best of health. But, business had a downturn back then and he called the company and he said he wanted to cancel and he did. But, and I always tell people, customer service is great at taking a request without necessarily giving you all the options. So I warn people up front on that because they're not trained to advise you on your policy. They just do what you want them to, what you tell them you want to do. And so my dad had canceled policies when he could have realized that he could have done automatic premium loans to keep the policies in force because they were overfunded. And he could have just taking out loans against the policies because it only would have been a couple of years. That's a short time in terms of the life of a policy. But anyway, those 3 policies are gone, and then he held on to his variable whole life that he had, which is a key main policy. At least they lasted a long time. But I tell people now, if you call customer service, check with me first, just to make sure that we get you what you need to get done, that we manage these policies properly. These aren't set it and forget it policies necessarily. So, especially if you're actively using them. So, actually, any other questions? Minshu, Latoya, Just because I muted you doesn't mean you can't unmute. I mean, I don't have that kind of control here. But
Latoya Jackson. That name
I'm good, but thank you.
I bet you. Okay.
Manchu, open up your
That's
screen.
hi.
Let's see. Let's see
Um,
your face.
okay. I guess so. There
All
you
right.
go.
How are you?
Here she is.
I'm good. I'm good. Thank you so much. It's all community.
All right. You
What'd
have
you
any
think?
question?
No, I'm gonna have to go back and watch it over again though, because
No
my
problem.
old brain doesn't take in things as fast.
No problem. No problem. Terrence, how about you? Terrence Holloway.
No, mine was just probably just a recap of the software. You said it was Circle of Wealth, Your Family
Yeah.
Bank,
And your family bank. Yeah.
and
That's the only two I
those.
use.
Okay.
So the
No, I
circle of
appreciate all
wealth
that good
is
information.
more for presentation, right? So you'll be able to present your concept properly. I know David also mentioned Leap. That's another great software as well. So it's for presentation, so you'll be able to sell a lot of life insurance. They both sell a lot of life. They help you, make it easy for you to explain your concept, what you're trying to tell your customers. It makes it easy. The YFB, Your Family Bank, is just another way for us to get in the door a lot faster instead of trying to tell people, oh, you want to invest in retirement plan or life insurance? No, because nobody's buying life insurance. You want 401, you want a retirement, you want tax-free retirement, you want mortgage protection? I don't talk no more. I just use the Your Family Bank concept. So that software, and we're doing some big things with the owner of that software, so that we're going to announce soon. But yeah, but there's opportunities.
All right, perfect. Is that book still available that you bought
Yeah, my
out
book,
there in the
man.
world?
Which one said again?
No, no, not your book. The 4,000 trillion
Oh,
dollar book that you bought. Is that
so since he died, his website, they shut it down and stuff like that. He's passed on. But a
okay?
lot of the trust and belief, when you get my book, you don't have to spend no $4,000. You're gonna get some good training. But you could tap into my
Yeah,
mentorship. You can tap into my mentorship class and you don't have to pay $4,000 either. It's very, very affordable. And you learn some of those
okay.
concepts. Those concepts are,
Well, if
that's
I can
why
pay pennies for the dollar for your membership, then we can do something.
that's right. Let's do it, man. Cool.
I appreciate it.
Yeah, man. Thanks for joining and tuning in.
All right. Latoya, Darren, anything else you guys want to pop in on? That or they're hiding on purpose. That's
I
okay.
know. Latoya Jackson, I think that name sounds familiar. I don't know if she's one of my team agents and stuff like that.
Well, I think Latoya had commented on our announcement post saying she'll be here. But of course, it's a famous name that I'm sure is co-opted. I'm sure it's
I
not.
know. There's a lot of, yeah, I know, right? I was hoping it was the Latoya Jackson 5, Hey.
That man. There you go. All right. Well, we'll go ahead and wrap it up then.
Yeah,
But
man.
Douglas, thank you so much. There's a lot of value here. And of course, this video is going to be, I'm going to trim it a little bit, but it'll be there on Facebook. I'm going to upload it to YouTube, and then we're going to separate that one segment out because I want people to know, yes, life insurance can be an investment, but it's not necessarily a security.
Right, it's
And
not.
it is an asset that can be utilized in multiple ways once we know how and why. And you're using some of the best tools to help communicate those concepts, and you're positioning yourself as a consultant. You're positioning yourself as an advocate, not necessarily as a life insurance agent, because if you position yourself as a life insurance agent, they say, well, give me term, or whatever they think they want. I could tell you're positioning yourself as a consultant, as someone who brings better wealth building ideas to the table. And that makes a big difference in how you're interacting with people. So
Yes, definitely. And I put
So
my
anyway-
IG post on there. So if you want to follow me, just follow me on IG. I'm Douglas Eze. There's, put some content out.
and you got a YouTube channel too.
And I have a YouTube channel, Douglas Eze on YouTube, and we're putting out some new videos every day and stuff like that. Just, just education, make sure you subscribe, like it or whatever. If you want, it's all good. Don't matter to me. I'm getting paid regardless. I get money. I own 9 companies, folks, 9. I own a techno. We're about to build a drone for a company, a country. So, I'm good. Money is not the issue. We just take care of people and do what we need to do best, which is our business. Our job is to make sure people are fully insured. Our goal, our agency this year is to do about $2 billion of death benefit. And,
Right.
because people are underinsured. A lot of families are underinsured, and you got to insure them. When they sit down with you, make sure you're giving them enough coverage to protect their income, their wealth, or whatever it is. So there's a lot of opportunities, and, we just share knowledge, man, and just help you become better. That's all we do. And let's win, folks. Let's win. This is the best industry in the world. Forget being a doctor, teacher, whatever. We are helping families, man. The best, enjoy it, And if somebody's ripping you off, run away from that organization and find some. There's tons of organizations out here. Don't be stuck. Oh yeah, just listen. You could sense your heart already tells you the truth always. Just listen to your heart, man, and let that go. All right, Dave.
All right.
See you,
Appreciate
man.
your
Thank
time.
you.
Thank you so much. This has been great. Appreciate your time, and we'll go from here. Thank you.
All right.
Thank you.
Thanks, guys. Ladies.